Hey, John, good afternoon. How's it going?
Hey, Pete, how are you? Good to see you again.
I'm doing great, actually. A little schizophrenic. After yesterday, large cap stocks took a hit. Today, they're rallying right back up. One thing that happened yesterday that was a little bit advanced, I guess I don't know what to say. We had that big number off of the CPI, right? The CPI came
Yes.
out. All three of them came in a little bit weaker than expected. Again, a little bit being the key word there. The futures rocketed higher right after the number, but then gave most of it back by the time the market opened.
Yeah, it
And
was interesting.
that was really interesting.
A lot of it, I thought, I mean, this is just my 2 cents. And then I saw that huge rotation into other names, intraday. But what I thought was very interesting was the employment numbers alongside of the CPI. So if you look at what happened on Thursday, you had that, you have a very soft CPI number, which was fantastic. So now we have 3% year over year, which is one of the lowest rates we've had in a very long time. The month over month number was actually negative, which is pretty cool. That was a negative number, which is always encouraging. But then you have unemployment. Now, we were talking last week about bad news being good news, and a so-so economy being the Goldilocks situation. But we had pretty robust. So the unemployment was a little bit less than expected. It was the jobs numbers and stuff like that. So it was very it was a mixed bag in the sense that it was good news is good news again. You know what I mean? Which was interesting. So I thought that the initial reaction in the futures market was trying to figure out, well, this is good news, but should we take it as good news? You know what I mean? It was kind of like that push and pull. But then what happened was you saw this tremendous unwinding of the Russell. There was so many hedge funds and institutions that were short small cap stocks. They've been the underperformer all year long, and this huge push on Thursday. And it is actually some follow through today.
I was going to say, actually, we're rocketing higher again today.
We do. Look at that unbelievable move out of that range. Just look how boring the IWM has been all year long. It's been in that sleepy little range, and now you have this huge move to the upside. And what that is, that's unwinding of hedge funds and institutions, unwinding their short positions. And what they're doing is they were long tech and AI in the Magnificent Seven, and they were short the Russell, basically. And that's what's kind of unwinding the last couple of days. And it's encouraging to see new sector participation. And it's encouraging to see small cap names catching a little bit of a bid.
So let's actually talk about what the market looked like yesterday afternoon and how everybody was like basically panicked because we haven't really seen a day like this in a long time, where it almost looked like they just literally went down the board and shifted to like, okay, flip all the switches that are normally green, red, and flip the other. And
that's exactly what happened.
Took a hit yesterday, and everything else. It's so odd how tech just completely lost it. Everything else caught that bid. And now today, going right back into today, it's back in the other direction.
But this is really cool. What was interesting, if you're kind of like, if you're not a everyday market participant and you kind of just lazily looked at the markets yesterday, you're like, oh, wow, markets sold off yesterday. The NASDAQ took a hit, right? Which it did. But the overall breadth of the market actually improved. The advanced decline line was over 70%, I think, or something like that yesterday. So the money didn't leave the stock market. I know, as crazy as that sounds, but money went into small caps. So what's encouraging is money's not leaving the stock market. And yet, it's important as traders to kind of know where that money is moving in and out of. And that's what we spend so much time on, right? And it's very important to understand that when these trades unwind, they unwind quickly and they unwind pretty violently. And that's exactly what happened yesterday and today.
When I was doing my research last night, I actually had to run my spreadsheets twice because on the surface, you're looking at what the NASDAQ did, you're looking at what the Dow and the S&P did, and you're like, wow, everything got crushed yesterday. And it's kind of the inverse of what we've been talking about for months, which is the small group of stocks waiting the whole thing, making the market look a lot stronger than it was. Yesterday was the opposite, where I was running the numbers. I almost couldn't believe what I was looking at over the last, over a 5-day period. This is probably one of the stronger ones that, we kind of do behind the scenes with stacked order flow. But you would never know with this giant red candle and the way that the market just kind of looked like it imploded yesterday. Every single sector lit it up yesterday. And I was like, wow, if you are a casual observer looking at this right now, you're going to panic out of your trades because you didn't earn that conviction to hold those good ideas to see what actually was going on with the market.
100%. There were so many more advancing names, and I started setting my portfolio up for the last couple of weeks. And I actually, I took a couple of small losses 2 weeks ago because I was a little bit early. I was like, I'm going to start looking at Home Depot. I'm going to start looking at like non-technology names. I'm going to start looking at some things that are a little bit off the beaten path. And some of them, I got stopped out on, or they kind of just fizzled because I was a little bit early. But I had a feeling that, as the NASDAQ gets toppy and these well popular names like NVIDIA and so on and so forth, they kept getting toppier and toppier, and they weren't making new highs. They were just kind of sitting there, or even making, even rolling over a little bit, without going too much in a negative territory. But just the overall move from one group into another happened so quickly. And it's amazing, especially probably in today's technology, how fast it could happen.
Yeah.
Maybe 10 years ago, a rotation like that might have taken a couple of days or a couple of weeks to happen. This was instantaneous within 1 to 2 days. It was pretty spectacular. So we'll see if there's follow through. It'll be cool to see if the sectors continue to show, if the sector's leadership continues, maybe in financials and some other groups. But I think that's overall healthy. If you take that SPY chart that you have right there and compare it to RSL, you'll see the massive difference, between that kind of sideways and that nasty red candle that you pointed out. RSP, that's right. So look at the difference. So it's the same group of stocks, but the RSP is equal weighted. So it kind of negates those magnificent seven that we always talk about. So you can see the outsized move it's had over the last 3 days.
So something that's really interesting right now, kind of working our way down and talking about the immediate reaction from the market yesterday off of what, it's being perceived now where the Fed is the possibility of the Fed doing something sooner now, where they're even talking about September. Obviously, nothing's, in stone, but the market certainly reacted that way. The bond market's pulling back a little bit. And then you kind of think these things through, which is what we like to do in our game plan meetings every day before the market opens. What does this mean, right? So don't just casually read the headline. What does this mean? Where's the opportunity? And then like these residential construction stocks loved the news the last couple of days, and now they're going to be on our game plan for next week. There's a whole list. I think we have 5 or 6 of them that we keep an eye on.
Yeah, anything interest rate related. Like one of the things I really shook my head about was the Russell, because I always said to myself, like, why is the Russell so lackluster when we know rates are going lower and small cap names should stand to benefit from a lower interest rate environment? So for me, it was a real head scratcher. Like, why is this just not going higher? You know what I mean? And it was basically a bunch of hedge funds saying, hey, it's the least performing group. Let's just short something and then use that almost as a hedge to go long the AI stuff, right?
Hey, it's Pete. John and I really want to thank you for being here today. You have all the choices in the world on YouTube right now to find out about stocks and options, but we want to continue to over deliver. And the only way we can do that is for you to let us know what you like. What kind of stocks and options training would you like for us to see on the channel? Best way for you to do that, give us a thumbs up. That tells us what we're doing is what you like. A little deeper, leave a comment. Let us know if you have any questions about what's on the video. If you want to take it even further and get personally coached by myself and John, click those links below in the description and see if coaching is right for you. Hope to see you soon. Thank you again.
So yeah, anything interest rate related now, I think is going to be the play going forward. So anything like the home builders, like, anything like, and even some of the, maybe even some of the financial companies, and then some of these small cap stocks for sure.
So we actually, in our research last night, also came up with, we like to break it down by sector, but then we don't go all the way down to industry groups. It's really, the whole point of doing all this is seeing where the flow of money, where institutional money is flowing, the strength of that money, how long it's been going. This is really one of our most valuable assets behind the scenes, because we're not guessing, we're not predicting. We're basically saying, where's money being spent in a big way? How long has it been going on? And we follow it. So then we kind of work our way down from that. And we break down not only by sector, but then we start breaking it down into individual groups. And like I said, residential construction is going to be on our radar next
Yep.
week. Apparel retail, these guys started to pick up again, big breakouts. But when we start to break it down by industry group, biotech had 10 different stocks light up there. So we started to pay attention to that a little bit more. But I really think the biggest thing I want to get across, something you just mentioned before, number one, the casual observer just looking at the indices is not going to have enough information the way the market trades right now. And when I say trades right now, I mean, this is the new era of the market. We are trading algorithmically, not me personally, but things are changing quicker. Rotations happening quicker. Headlines are creating moves like that. So you have to spend that little bit of extra time. And it doesn't matter how you do it, but pour another cup of coffee and spend 10 minutes to show you money that you care about it to get in there. And I'm going to tell you where that manifests the most right now, John, is if you're not doing what we just showed you, where the market was down in the major indices, but virtually every sector other than technology was up, you're going to panic out of good trades and you're going to leave money on the table.
You definitely will, because you won't know where to look. All you'll see is the headline number down and you'll freak out. If the NASDAQ's down 2%, you're going to freak out if you don't understand the underlying what's going on underneath the hood. You know what I mean? And there are so many pockets of opportunity now. I'm actually really excited about what happened the last couple of days. I hate when the market just kind of slowly melts higher on a couple of names, on no participation, on light volume. That's like, to me, a trader's nightmare, because you're just trying to find good ideas and nothing's really coming to mind. Your screeners aren't really showing you, enough stuff. But now things are getting a lot more interesting.
Yeah, and it's spread out a little bit more too, where it's not. The way I talk about it in the community is everybody's on one side of the boat, and if that boat tips, it's gone.
Yeah.
So to have more opportunity spread out, we're seeing basic materials starting to catch a bid right now. Industrials catching a bid a little bit right now. Healthcare, we just pointed out. So there's a little bit more money being given attention to different places, which is going to open up some opportunity in stocks that aren't necessarily $1,000 in that area for be able to build a portfolio a little bit more.
Yeah, I think, if you look at some, like you mentioned, biotech, that's, it's within the healthcare group, which is a sector that's starting to look interesting. And within the healthcare group, biotech needs the most funding. They're the ones who, without getting too much into fundamentals, they're the ones who need the most money to borrow. And if rates go down, they're going to stand to have better funding, better potential revenue, and so on and so forth. If we're in a lower interest rate environment. That's why they're catching a bid. And you have to keep in mind, the stock market's always that forward-looking indicator. So, the stock market's thinking 1 year out, 6 months out, 9 months out, whatever. And they're saying, well, what stocks are going to benefit from the current climate that we're in right now? And that's pretty much what's happening. And on the short side, same thing. On these large cap tech names, I don't know. I would necessarily counter trend trade them and short them necessarily, because they are very strong and they did show some resiliency today. However, there might be some lower quality second tier, I like to call them, names within that group that you could start to look at on the short side.
How are you trading options right now with the VIX still down at the 12 area, which to me is just amazing?
Yeah, that is a great question, because there's lots of different types of option traders out there. And what I like to do, and this from the community, Pete, that I don't pick one strategy and stick to it. Like I select my strategy based on the environment that is given to me by the stock market. That's a very big difference. A lot of options traders out there, I only do credit trades because I don't believe in being debit, because I think, time decay is your enemy, which is true in part, right? But I think putting together an intelligent strategy based on what the market is giving you is a much better recipe for success. So to answer your question, in a low volatility environment, you need to be more on the debit side, unfortunately. So if you're used to doing credit trades where you're selling premium, you're trying to receive premium, it's a challenging environment right now. Now, we are in earnings season now, so there might be some exceptions here and there. You'll see volatility spike within individual names, and you can do credit strategies going into earnings. Those are low risk, lower reward type strategies. So those work out pretty nicely going into earnings. However, as a general rule, if I'm putting together a basket or a portfolio of options trades, I'm going to be more on the debit side. So I'm going to be more long calls, maybe some debit spreads like verticals and diagonals. I'm also going to go further out in time. I'm going to take advantage of the fact that volatility is low, and I'm going to start looking at longer term plays where there's some early stage uptrends in some of these new performing sectors, some of these like up and coming, groups that are starting to show early leadership. What I'll do for that is I'll go out 3-4 months even, and I'll sell premium against it, on a monthly basis, but I'll have a longer term play on stuff like that.
So as far as the rotation and what happened yesterday and how we're following up again today, you're normally building a basket. You're putting out a portfolio based on grading the market. How often does that change? Like, we had a lot of people reaching out yesterday. This big down day, big volume. Technically, the SPY was what is known as a bearish engulfing candlestick.
Yeah.
Took out the high, took out the low, closed on the low, and people kind of panicking over one day. As a professional options trader, how do you determine when you'd be adjusting the portfolio?
Yeah, you have to. I mean, I look, on a weekly basis, I'll grade the market. But, when there's a major rotation or when there's a major event, like, for instance, what happened 2 days ago or yesterday rather, I'm going to look to see if there's any technical damage done on the chart. So I let the charts kind of tell me how bad is it. So you just pulled up the S&P. I know there was a bearish engulfing candle there, but we're still in an uptrend. You know what I mean? The bottom line is, we still are above our moving averages. We're still in an uptrend. So I'm not going to get shaken out of my grading system. You know what I mean? I'm not going to, like, if I'm a B plus, I'm not going to go to a B minus just because one bearish engulfing candle. I'm going to look at the overall sentiment of the market, the overall health of the market, as well as the overall trend of the market, and make my determination that way. And then I'll do it based on, obviously, not just the S&P. I look at the Qs, I look at IWM, I look at the Dow Jones as well. And sometimes I'll have a heavier grade on one group versus another group. So I might upgrade, for instance, like IWM broke out of its range. So if I was like a B minus on IWM on Monday, I am now a BB plus. But that doesn't change my grade for SPY.
Right.
You know what I mean? So that just means that if I'm going to add a basket, if I have a basket of a theoretical, I don't know, 10, 15, 20 things, now I'm going to be looking to add IWM related stuff to my basket. So small cap, non-tech related names I'll be adding.
Would you say this rally in the IWM, again, putting it in context, everybody, it's only 2 days, basically, yesterday and today. There's a lot of talk right now that it's risk on, where all of a sudden now it's like, okay, we're getting closer to the rate cut. We're getting away from technology stocks for the moment because, and again, we're super clear. We've got to separate the stock from the company. Like, the companies are in amazing, amazing shape. We're talking about the stock price and justifying future valuations to buy it at this price, looking for higher or dividends, right?
Exactly.
So risk on, more rotation, looking at other ideas. I wanted to kind of touch back on people panicking about yesterday, and we get this question all the time. Usually it happens, which is a great problem to have. You get a really super fast move in your direction, and they're all panicking. I need to take this profit. I need to take this profit. Those are usually the same people that say you can't make 3-to-1 risk reward on your trades because they're pulling up their profits the first minute they have it.
Right.
That's a whole other story about having a system for taking profits. But the side of the market that people get most confused of is the trend over? And the problem that I see that a lot of people have is very easy to fix. They're not sure which trend they're trading. They hopped on something that was moving, and they haven't defined the edge that made them buy it in the first place. And I'll give you a perfect example. We had a couple of trades that were called out in the community this morning where the stocks just yesterday and the day before came off of the lows, had 2 days of buying versus 4 months of selling. And people are like, these, I'm going to look, I like this idea. I really like this idea. And it's 4 months versus 2 days. And that really it really is kind of, I love when people ask those questions because we want it to be a dialogue in the community. That's the whole point of the pre-market game plan meeting. to
Yeah.
identify what's great, what's not, and get out of them, what they're looking at. But then you ultimately need to make the decision to avoid that if it's not at the top of the list, which is
Yeah.
really important. Minimizing those kinds of ideas is really what separates profitability from breaking even for somebody who knows everything.
Yeah, if you were looking at, if you're just trading based on past momentum, you probably were in NVIDIA, Apple, Meta, and Google, and all those names that kind of got tanked the last 2 days. But if you looked at the trend, if you looked at NVIDIA, it made a double top. It made a lower high before all this sell-off occurred. So to me, I think if you follow, it's obviously important to know what's going on, but you can see here that it kind of was limping along for a while there, even though obviously still very strong stock. Not saying you should go short it necessarily. However, if you kind of just look at the chart, let the charts kind of tell you where the relative strength is. I want to see something that's making newer highs, like higher highs. I don't want to see things that are kind of lumping along like that. And even though NVIDIA has that reputation of being such a stellar stock in the last 2 years, it hasn't really been very impressive from a technical standpoint for the last 2 weeks. So, that would have made me avoid the stock the last 2 weeks, and I would not have been in a trade like that. So you have to kind of realize where you are on the chart. So building an edge is very important. You mentioned building an edge. One of the things I look for when I'm trying to build an edge is the right sector, the right name with relative strength within its group. So that means higher highs, that means, above its moving averages on heavy volume, also a leader in its group. And then obviously trying to find a good entry point. So yeah, you want to pick maybe a down day or maybe a day where it pulls back a little bit or bases to get in. And then you pick your strategy on the option side. Then you have to take that second step and figure out, okay, what environment am I in? Do I do debit? Do I do credit? Do I just buy a straight call? Or do I do something a little bit more creative?
For somebody who's been trading options a long time, but also teaching, what are the common mistakes of people that know all the strategies but can't quite put it together to get profitable?
I think a couple of roadblocks that I see a lot of traders in our community have had in the past, and I try to work through coaching with, is just don't stick to the same strategy. Try to, again, let the market dictate to you what strategy to use. Sometimes you're more comfortable using a particular strategy. It might just be your personality trait. It might be you might just be more comfortable doing a credit trade or more comfortable doing a straight call because maybe you don't really understand the mechanics of a two-leg strategy. What I encourage students to do, what I encourage the community members and everyone else to do is to step out of your comfort zone a little bit and just try those strategies. And what I mean by try is, in today's technology, Pete, this, you can practice. You can have a demo account alongside of your real account. And if you're uncomfortable with a certain option strategy that you want to see how it works first, just throw it onto your demo account and see how it behaves in the environment that you're in. And then you might come across a new something you're more comfortable with. And that's what I encourage people to do. There's no excuse for just doing the same lazy trades in the options market over and over again. It's really important to pick the right strategy. And it takes a little bit of practice. But it does allow you to be more consistent, and it allows you to manage risk better if it's done properly.
I actually have, because I had my trading firm for such a long time, I have a really strong opinion about the right way to learn and to eventually get profitable and whatnot. And it's not always in sync with what most people want to hear, which is just give me the push button thing so I can start making big money immediately. And I tell the story of in 2007 when I was developing a second strategy, which is called the saturation play. After having all that experience, I traded 100 shares just on that strategy for 90 days. Even with all my experience, I'm like, I need to know two things. Does it work and will I follow it?
Yeah. And can you need some back testing data, right? So one of the things I started doing more of, like earning, people always ask me, what do I do for earnings? What do I do for earnings? And this is actually a good topic to talk about because we're in earnings season now. One of the coolest strategies to do in the options market for earnings would be targeted butterflies. And now a targeted butterfly is a 3-leg option strategy. So it does involve a little bit of, you have to pick the right strike prices and so on and so forth. But you're essentially going long one leg, you're going short two pieces, and you're going long another leg. So, and basically the one in the middle, that short, the one that you're short two pieces of, that's your target essentially. So you can target a lower target, you can target a higher target, and that's where the term targeted butterfly comes from, where you're basically, if you're correct and you nail it right on the head, you can make a 6-1, or even more sometimes. But it's obviously very hard to nail it perfectly. So sometimes you have to take some off early. Sometimes you have to, manage it a little bit. But it's a really cool strategy because they're generally a low risk trade because they don't cost a lot of money. They're usually a debit trade that doesn't cost very much because it's out of the money. But again, that's something where you got to practice those. You know what I mean? That's something where you open up a demo account and you throw a couple on and you see how they behave going into an earnings cycle. And then you get comfortable using those instead of just doing straight calls and puts. That's like a lotto ticket that's bound to be a zero. You know what I mean? So you're better off practicing on certain strategies that way,
So for next week, let's kind of wrap up and give everybody a game plan for next week. Basic materials for me are starting to wake up a little bit. We just went through financials just reported. I'm still waiting obviously some of them are up, some of them are down, but the volatility is awesome. But more specific, tradable basic materials as a sector is starting to reverse to the upside. Metals are starting to pound a little bit to the upside within basic materials. Residential construction,
Yep.
KBH, Toll Brothers, Pulte Homes, that whole group, I'll be looking at next week as well. Technology is not going away, but it's not my main focus now because I'm really looking for where can I get the biggest bang for my buck. So I'm not shorting tech stocks necessarily right now. I'm looking for new groups to be long, and that's kind of where I'm going to be focusing next week.
Yeah, I think it's a little bit too early to be like so bearish on tech, even though we had that bad day yesterday. It was just one day. You know what I mean? There might, like I said, within the groups, there might be one or two second and third tier names that are weaker, that show relative weakness you can look at. But I think on the long side, I agree with you. I think basic materials, I think certain areas within healthcare, financials, and industrials. You know what I mean? Those are going to be names where those are going to be areas in the market where I'm excited about that haven't really produced much in the last couple of weeks, even months, that I think are starting to look interesting. On the short side, again, maybe energy still kind of can't get out of its own way. So we'll see how that goes. There might be some names here and there within that group. That's still in that long-term downtrend, and it looked a little interesting there a couple weeks, like a week or two back there.
Yeah,
but it just rolled right back over. So, now it's back up and doing that little bear rally. So we'll see if there's some names within that group that I would like to maybe go short at the same time. So to me, I always like to be balanced. We talk about this all the time. I'm never going to be 100% long in my basket. I'm always going to look to have a couple of shorts up my sleeve as well. Even if the market takes off, I'm going to always have one or two that I'm looking at just to kind of offset my portfolio.
So I actually got kind of excited on our pre-market game plan meeting today because the way things shifted yesterday it was so dramatic where there was money shifting into other areas. The technology trade has been amazing, but you always kind of felt like you're playing musical chairs. And if that one chair left, the whole bottom would fall out and there really wasn't that much else to do because we've been talking about lack of market breadth for almost a year, quite honestly. And the reason I got you got to hear me on the game plan this morning. I must have sounded like I had 8 cups of espresso because to be able to now allocate money where it's not all concentrated in one ride or die sector, as great as it was amazing. You just feel a little bit more comfortable where it's not all in one spot.
Yeah, and it's also easier to allocate capital that way too, right? So you could depending on how big your account is, it doesn't even matter. What you can essentially do is now you're going to be looking to add names in industrial, basic materials, healthcare. You have like 3 or 4 choices now.
Yeah.
Within the groups, you have even more. So it's exciting because now you can move things quickly. So like if let's say one of those 4 sectors just doesn't work out for whatever reason, it's very easy just to kind of move that money away and then kind of allocate it to the area where it's outperforming. So instead of just that small little group, you know what I mean? It used to be so frustrating because sometimes even within the group, there'd be some switching back and forth. Like AMD and NVIDIA are a classic example, right?
Yeah.
Where one is taking from one and one is taking from the other. That gets frustrating, and it could drive you nuts. So now it's a lot more interesting, a lot more fun, and I think a lot more opportunity.
I agree. Be easier to build that basket, that's for sure. All right, John, we got our game plan for next week. Have an awesome weekend. Thank you so much for your time. Any parting words of wisdom?
Parting words of wisdom: do not trade the same stuff every single week, because this was a very valuable lesson for some people that might have learned the hard way. If you're just trading the same stuff, you probably got ran over on Thursday. You know what I mean? And what you want to do is spread it out and try to anticipate where that institutional money flow is going, and that's where the skill comes in.
All right, perfect. Thank you, John. Have an awesome weekend, and let's get a good rest for next week. I think volatility is going to be amazing, so you want to be able to take advantage of it. Have a great weekend, everybody.
Have a good weekend, everybody. Take care.
Bye-bye.